Good evening, Trump's family. Welcome back to my channel. Have a good night, everyone, and God bless you. Alright, the following is a collection of news from Patriots. Let's get into the news this late Monday night. Everything that is happening with regard to the January 6th committee or with regard to Joe Biden campaign, all of it is an attempt to distract from the simple fact, which is that Joe Biden's economic record is abysmal. I mean, truly abysmal. According to the Wall Street Journal, U.S. consumer inflation, excluding energy and food, accelerated to a new four-decade high in September, a sign that strong and broad price pressures are persisting. The Labor Department on Thursday said its so-called the Consumer Price Index, which excludes volatile energy and food prices, rose 6.6% in September from a year earlier. That's the biggest increase since August of 1982. That measure increased 6.3% in August. It's actually rising faster than it rose last month. So overall, by the way, the inflation report came in at 8.2%. And when they say that it rose 6.6%, excluding energy and food, people spend a lot of money on energy and food. As it turns out, the inflation report likely keeps the Federal Reserve on track to increase interest rates by 0.75 percentage points at its meeting next month. It also raises the risk officials will delay an anticipated slowdown in the pace of rate increases after that, or signal they are likely to raise rates to even higher levels early next year than previously anticipated by policymakers and investors. Again, they're gonna have to slam on the brakes because there was so much easy money that was dumped into the system. U.S. stocks tumbled, nearly trading before reversing to close much higher on the day. Bond prices fell while yields, which move in the opposite direction, rose again. People are not willing to buy American bonds because they can see that we're gonna have to pay off all of our debts. Using these inflated dollars, prices rose last month for housing, medical care, airline fares, and other services, threatening to keep inflation high for the foreseeable future. Investors and policymakers follow core inflation closely as a reflection of broad underlying inflation and as a predictor of future inflation. On a monthly basis, the core CPI rose 0.6% in September. That was the same as August was up from 0.3%. In July, Bill Adams, the chief economist at Comerica Bank, he said inflation has built up a lot of momentum over the last year. That's going to keep inflation higher than the Federal Reserve wants it for at least a couple more months, if not a couple more quarters. Now it's gonna be a couple more quarters. This is not coming down in the next couple of months. Core services prices, which tend to persist once they start rising because that obviously means increased wages and benefits, rose at a 1-month annualized rate of 9.9%. Who said the services that you're paying for your one of the dry cleaners or whatever, the sharpest rates since 1982, has now been seen here. In terms of the increase in prices for motor vehicle repair services rose 2.2% in September, month over a month. That's not year over a year, that's month over month. Veterinary services and daycare and preschool increased 2% last month alone. These are price shocks that are there rippling through the American economy. Unsurprisingly, bond yields ended higher, lifted by the inflation data. Bond yields are the gap between the price of a bond and the par value of the bonds. What that means is fewer people are buying bonds because they have very little faith in the American government at this point. Bonds rallied with stocks later in the session, eroding some of the climb, but unlike stocks, they failed to recoup all of their price declines. Yields rose most sharply on short-term bonds, which are particularly sensitive to near-term interest rate outlook. They also climbed on longer-term treasuries, which tend to have a larger impact on the financial markets and the economy taken together. Thursday's moves in stocks, bonds, and currencies were difficult to understand. Exact Griffiths, senior strategist at the Research from Credit cites they provided more evidence of just how volatile markets are and how difficult they are to navigate. But Treasury yields did tell a coherent story, said Griffiths, with rising short-term yields driven by bets on higher rates, and less rapid increase in longer-term yields reflecting recognition that recession risks are rising. So basically, the short-term rate, you're not going to invest in a bond that is paying you off in say 3% or 5% over the short term, because inflation is going to outpace the actual increase you got from the bond. You're instead going to hold on to the cash, or you're going to use that cash to invest in something else you're going to try to buy, or like you don't even know what to do with your money, is the real issue here. And then when it comes to longer term bonds, the question is going to be, if there is a recession, do you really want your money locked up in those longer term bonds? So a lot of this is disaster area for the United States economy. We're starting to see the same sort of squeeze on our bond markets that the UK has been seeing meanwhile, just to reintroduce inflation to make sure that it becomes a permanent feature of American life. Our cost of living adjustments that are built into Social Security came in at 8.7%. So Social Security checks are now going to be about 9% bigger than they were last year. That is the largest cost of living adjustments benefits in 4 decades, according to the Social Security Administration. Now that the administration is championing this, they actually tweeted out, and the New York Times was tweeting out, well, this is going to be a really healthy boon for older Americans like, well, that's it. That's a really weird way of reading in permanent inflation into the economy as a good thing. According to people who are receiving Social Security checks, of course, they need the extra money. The problem is that also is an inflationary pressure. It's an increasing inflationary pressure. Next year's COLA increase is likely to hasten the date of insolvency for Social Security Trust Fund, according to the Nonprofit Committee for Responsible Federal Budget, which predicts that full insolvency for Social Security is going to occur in 2034. So not all that far distance at that a time Social Security income would be sufficient to pay for about 80% of scheduled benefits, which means radical increases in taxes or cutting in benefits or delay of old age, retirement. Those are the 3 options that are available when Social Security goes bust. Again, you're going to see the Federal Reserve increase the interest rates more radically. They're going to have to continue escalating this thing. Mortgage rates too are jumping tremendously. According to MarketWatch, the rate on a popular type of home loan increased this week to its highest level in 20 years. According to data released on Thursday, the average rate on a 30-year fixed loan increased to 6.92% as of Thursday, according to the results of Freddie Mac's primary mortgage market survey that has the highest rate since April of 2002, which means that we are about to see a tremendous cratering in the real estate market, when those mortgage rates are hitting 7%. Who can afford a 7% mortgage in an economy that is the shaky mortgage rates of more than doubled this year, as the Federal Reserve has moved to combat inflation? Sam Cater, Freddie Mac's chief economist, and quote, "We continue to see a tale of 2 economies in the data. Strong job and wage growth are keeping consumer balance sheets positive, but lingering inflation, recession, fears and housing affordability are driving housing demand down precipitously. Basically, people are taking their money out of the market, they're waiting around on it, because they're afraid they're gonna lose their job over the course of the next couple of quarters. And many people will lose their jobs over the course of the next couple of quarters. All these bills coming due just before the midterm elections is precisely why Joe Biden was begging the Saudis to pump oil a month before the election. The Biden economic advisors have no strategy here. They're just going to try to whistle past the graveyard here. So yeah, Brian Dees, White House economic advisor, suggesting that inflation is it's really not about America, it's a global challenge, as though America isn't the leading factor in the global economy. And this is some big news. Folks, were getting pretty close to calling this whole thing around another Democrat. It seems as though John Fetterman, his campaign is officially over. It's an unfortunate situation, especially for John Fetterman, his parents who are going to have to foot the bill as he moves back in and they're stuck paying his living expenses once again. But in the end, it is what it is. Another far leftist hack bites the dust. Falls campaign collapsed. John Fetterman is done. It's official after months of John enjoying a 5 to 12 point lead over Dr. Oz in nearly every single poll. A couple of months ago, Dr. Oz couldn't even get above 40% support after months of the polls showing that John Fetterman was the future of the Democratic Party. As ridiculous as that sounds, this race has completely turned around as Dr. Oz surges in the polls and John Fetterman continues to suffer from campaign blunder after blunder, and the most recent Insider Advantage poll shows a tie between the 2 candidates. Folks, if Dr. Oz was trailing by 3 to 5 points in most of the polling data, he still stands a chance if Dr. Oz is hired, or is possibly even over the next couple of weeks beating John Fetterman in the polls. Well, then it's over. It's absolutely done for John Fetterman. And it seems as though we have reached that point. The Republican surge is upon us. The Dr. Oz surge is definitely upon us. And that, of course, is what we're talking about. I got to keep you guys updated on everything new in the most high-profile races. Alright, folks. So this graph over here pretty much tells the whole story visually. John Fetterman has been dominating the polls for basically 6 months at this point. That lead has continued to shrink. John Fetterman continues to tank and Dr. Oz continues to surge. Well, for the first time after months of polling data. This race is no longer in Fetterman's hands. Insider Advantage / Fox 29 poll Fetterman AWS neck and neck as Shapiro's lead over Mastriano narrows as Election Day nears a new insider advantage. Last Fox 29 poll shows Republican nominee drive. Mehmet Oz has gained ground on Democratic nominee John Fetterman. In the Pennsylvania U.S. Senate race, the race is now a dead heat. According to the poll of 550 likely voters conducted 3 weeks before Election Day on November 8, the poll has a margin of error of 4.2%. Fetterman and AWS are now tied in the polling at 46%. Apiece, with 5% of those polls remaining undecided. Libertarian candidate Eric Gerhardt came in at about 2%. And once again, folks, our theory is confirmed. Not only did we predict that the Libertarian or the third-party candidate would continue to drop the closer we get to Election Day, we've seen that the Libertarian candidate could get anywhere from 4 to 5% in a couple polls. Well, we predicted that the closer we get to Election Day, the more we would see that drop. Now this poll is suggesting that the Libertarian candidate is going to get about 2%. And it's possible that that goes even to 1%. And we've also been predicting that undecided voters are going to continue to split for Dr. Oz. I mean, let's be real here. Dr. Oz has had some image problems even within the Republican Party. When he first announced his candidacy, he was largely viewed as a possible neocon politician that didn't exactly fit the mold of this new Republican movement, this new conservative grassroots movement. But with time, of course, that situation has gotten much better. And a lot of people are coming over to the Dr. Oz camp, especially considering whether you like Dr. Oz or not, or whether you think he's the strongest conservative doesn't really matter. Because at the end of the day, the point is you got to stop far-left radical John Fetterman from getting his mitts on political power, and of course probably even more serious beyond that, stopping the Democratic establishment as a whole from gaining control over the Senate. The closer we get to Election Day, the more real things seem, the more Mehmet Oz is expected to surge in the polls. And now Insider Advantage, which is one of the most accurate pollsters out there, is suggesting a clear tie. In fact, if you take a look at all the polls here, every single one except for USA Today, which is a garbage polling firm. These are all some of the most accurate pollsters out there: Emerson, Trafalgar, Fabrizio / and Zaloni, and Insider Advantage. All of them over the last month or so essentially showing the race within the statistical margin of error, and also over the last couple of months slowly trending in Dr. Oz's favor. And my prediction here is that this is going to be a continued trend. The ball is currently in Dr. Oz's court, and he's painting a very clear contrast between weak John Fetterman and himself. The fact is that John Fetterman is not healthy, and his campaign is prioritizing weird issues that have nothing to do with people's priorities. Things like woke criminal justice reform and other nonsense. But Dr. Oz, on the other end, is tackling inflation. It started off with the whole crudity video, which of course was kind of cringe, a little bit novice, but in the end, I have to give it to him. He's cleaned up and he's packaging a very coherent message, a clear solution in his response to the number one issue on the ballot in Lachon. Everyone listen to this. There's no question why this race is now neck and neck. I focused on the issues you mentioned, especially the economy, crime, and the border with drugs. But gas is part of, to me, the economy, because if you really want to drop inflation, and it's a much less painful way than raising interest rates, allow natural gas to be unleashed. In Pennsylvania, Tom Cotton is coming out. Tom Cotton and I were on Wellheads just to look at this. But when you say that fracking is a stain on Pennsylvania, which John Fetterman did, and you showed videos of him saying what he actually believes, that's insulting to people who are making their living that area. It actually destroys communities. And we drive up inflation because energy drives 1/3 of the total inflation that we see. Okay. And this right here, folks, this has to be the message. You know, when it comes to inflation, you hear all kinds of things. Democrats tell you the answer to inflation caused by stimulus is more stimulus. You'll hear some more conservative-leaning people tell you that the answer to inflation is lower taxes. Both of these proposed solutions are incorrect. Why believe that lowering taxes in the long run is a good thing? The idea that you should lower taxes in an inflationary environment based on basic fundamental economic understanding is just a bad idea. Because both of these things stimulate the economy. They give people more money to spend when the problem is right now that supply can't keep up, i.e. increased prices, higher inflation. We're seeing that whole fiasco play out in the UK right now with failed former Prime Minister Liz Truss. The only answer to inflation, as of right now is production. Produce more oil, make energy cheaper, produce more products. Honestly, if you're going to reduce taxes on corporations and people building and producing things. That's how you tackle inflation, which is the opposite of what Joe Biden is doing with his increased the corporate tax rate. Maybe when things are stable down the line, reduce taxes, but right now, that's not the solution. The solution is to produce to tackle the supply issue. All the supply bottlenecks from all the lockdowns and all the nonsense is one of the most important driving factors to the inflation that we're seeing. It's not just Putin's war in Ukraine, and of course, attacking domestic energy production is a big factor as well. Well, Dr. Oz has seemed to figure this one out. It seems like he's a pretty smart guy. And he's one of the only candidates on the ballot who's got a clear answer to the number one issue facing American voters right now. Dr. Oz is right. And the more people listen and the more people are exposed to this idea and Dr. Oz's ideas, well, the more clear that contrast is going to be between Dr. Oz and John Fetterman. And that, I think, is what's happening right now, folks. It's just the juxtaposition between the two, the contrast between these two candidates. One is a risk, who's clearly unhealthy, has spent most of his life being an irresponsible bum, and the other seems to be a sharp, successful man with his values in the right place. The closer you get to election day, the more real this decision becomes. It's irresponsible Democrat slob versus competent, successful surgeon man, and in the end, when it gets real, when push comes to shove, my prediction, Dr. Oz is going to take this one, and I don't even think it's really going to be that close. We now see a tie between the two candidates. That's a 10-point gap that's just closed, and I think this trend is going to continue. Keep coping, left boys, it's not looking good for you. Ladies and gentlemen, give me your thoughts below. And hit subscribe right now. And I will see you guys next time. Thank you for